All right, we go to Procter & Gamble. Again, I said there's a run to stocks like XLP. This is one of them, boring stocks, and it's rallying like crazy into a prior sale zone. So anything into 178, 180 is a sell. Anything above 180 is a buy to 192 or higher. I challenge them to do that, but I guess it's possible. And a bunch of support below. It's a good company, very stable. It's not the company that should excite you and lead the market higher, especially when the market thesis is AI this and AI that. PLD, pro whatever. Look at this P&L. Are you kidding me? Holy crap. What the heck is this? Is this a logistics, real estate, strategic capital segment? What? Their net income is 1.2 on a basis of 2.2 revenues? Whoa. Yeah. Is this based in the US? San Francisco. Wow. Whew. Distribution center? That is not what the description sounds like it. Anyway, they're selling rallies. I think the next move is 115, but I cannot tell you it's not 135. So it is vulnerable for dips, but holy moly, this P&L is solid. 118 might be the next target. Palantir. Ching. Okay, so I was speaking like a crazy person on the way up. I've been pushed back on, validly so. Oh, you've said avoid it from when it was in the 40s or 50s. That is true, but that doesn't make me wrong. It just makes me working my system and avoiding the potential loss. So at every point in time, I could have saved somebody that much downside. Bitcoin just beeped at me. All right. So it must have just hit a resistance zone. That is a 35% drop. Like if somebody heard my words in 40 and 50, okay, so they missed out on the rally, but now they can get back into it without a lot of damage because the process is solid. I've been doing this for a decade. I'm okay missing out on 100 rallies. I would never want to buy a stock and have it drop on me 40% within 10 days. And that was the setup I was avoiding all along. It wasn't perfect, but it was correct. So now what? I still wouldn't touch it because it is still an expensive stock. I like the company. Their operational margins are crap, but they can do something about it. Their actual margins are great. And let's see the statistics. That's my only concern. Okay, so the price to sales ratio is now 75, which is a lot lower than 105, but it's still 3 times higher than NVIDIA's. Yes, it is 3 times more expensive than NVIDIA's on the price to sales. However, I used the term when I said avoid it, which is normalize this ratio. I said 2 ways this ratio normalizes. A, it says I'm going to explode in my sales and actually delivers the sales. The ratio shrinks. Or B, the stock price falls because it's the numerator, and then you would have a shrinkage in the ratio. Well, that is a shrunken ratio, but it's still 3 times more expensive than NVIDIA. So is it a bargain? Hell no, not a bargain. Technically, it hit my target almost exactly, but that is not the whole target, but it is a zone. I would not be surprised to see it at 70 or 96. I would rather miss out on the opportunity at 96 to see if I can get in at 70. Now, if I wanted to buy it at 50, I am confident I can find a put to sell at 50 towards the end of the year or this year. If you're that person, let me know. We can discuss it. I think if the market corrects or crashes, that is a big if, this stock will be cut below 50 by a long shot. Okay, so the idea is to be patient and be methodical. I don't go all in. If I bought it at 118, I am not adding here. I say that with complete confidence because that only means that I entered it at 102 at 80 times sales. No. If I bought it at 118 or 116, whatever I said, I'm hating it, but I would hate it more if I add here and then it falls another 15-20%. This also is a game changer with regards to risk appetite. If this stock cannot get up to 100 again soon, I would tell you that risk appetite in this market has changed, because this stock would drop 3% and rally 8% the same day and then break into a new high. So that could be an indication of risk appetite. Philip Morris, I believe I just sent out a short, because this is another one where the P&L falls off a cliff with regards to earnings. I don't know what that's all about. It's boring otherwise. And the stock goes into an all-time high, is it? Or is this a like decades high? No, it's an all-time high. And what? Did we buy a put or sell a call, or I don't remember what we did. Anyway, I'm short PM somehow. We'll see how that plays out. This here is not an obvious entry point. What the hell is going on? Okay. We sold the call? Okay, good. Okay, so somebody is just giving me information on, thanks Echo, on Palantir. They priced in a $50 put for next January at $4. If that's the case, I would go lower and sell that, or sell that shorter term. Okay. It's still not for me at these levels. Now, this one is PayPal. Again, they overdid it on the top, and this guy is tagged with Bitcoin at times. When Bitcoin falls, this one falls. So keep your eye on the Bitcoin trend. Bitcoin needs to hold the floor that it just placed, otherwise it goes to the 70s and the 50s after that. What I'm saying here is, when it goes into a sell the rally mode, it goes into it for months. It's already been 2.5 months, 2 months. It rallied for, I don't know, 4 or 5 months. Buy the dip, buy the dip, buy the dip, buy the dip, and now it's going the other way. It is falling into a support zone, and it extends through 63 or 64. So selling a put spread, yes. Selling a put to own shares, yes. Buying calls as a trade, yes. Buying calls as an investment, okay, if you put a lot of time on the clock, and also look into combining it with a credit put spread to bring you some credits, and selling a covered call against the one you buy. Hopefully you understand what that means. If not, pop into the live room for 10 minutes sometime this week. If you're a member, if you are a member, then we can discuss it in details and I'll give you a specific plan. Until then, this is not for me. It is too much of a black box. I traded it in 2022 and it was hideous. We made money, but it was extremely tiresome. Rallies into 77 will be sold. It is shortable as it rallies into 77. So I will put the letter R up here and the plus above there. So there's a chance that this rally fails and they retest the support zone, and they better hold it. If not, they will sell the rally one more time. Qualcomm, great P&L, good base. You better not lose 148. If you do, that means you've repriced something and you're going to in the 30s, 130s. On the upswing, area of resistance, I'm going to repurpose a box. It goes to here. Shortable into this red box. May prove to be unbeaten resistance. So far, so good. I'll leave it there so I know when I put it. Okay, these got played out, but they are areas. This is a, where do I want to put this? Right here. Resistance zone. It is not hashed, and it should be red. As we rally. Support, yes, you better not lose it. If you lose it, that is not the forecast. So what do I do with this? I would sell a put spread if I wanted to generate cash. If it wasn't for this spike and that one, I would speak about these arrows. In theory, if you ignore these spikes, these arrows are still in play. So let me rephrase. If you lose 148, those arrows are your targets on the left. Capiche? Okay. QQQ. I will have a whole segment on these things tonight. What you need to know is that We lost the 1220 levels, the most violent day of 2024, and we're in the process of trying to recuperate. If we don't get back above 512 and 13, we are in a sell the rally mode, and we may end up at 490 and 92 this week. So you need to take out the resistance from 512, second level 520, third level 528, versus holding last week's low. You lose last week's low, which shouldn't be easy, but if you do lose it, you're going to flush lower. RTX, no touchy. Oh my gosh. Okay. No, it's shortable, in fact, into that, but I wouldn't touch it. These stocks, I do not trade. RTX, LMT, I don't trade those. What did LMT do? No. Okay, so I don't know what it's rallying on, but it's rallying into a prior wick. That's a tough seller. So whoever's stuck here, they better get out. If you take that wick out, okay, the moonshot, and this market is dumb enough to think that that's what's going on. I wouldn't argue with it. If you're looking to short it, leave it alone. Leave it alone. Just leave it alone. Look at it. It's totally bonkers. We've tried to chart the downside. It worked once, but not the second time. It worked once perfectly, but not the second time. It's not a stock for me. StarBucks. What do they do again? Hamburgers? Dad jokes. Oh my gosh, more things to delete. Okay. All right. This will disappoint people, I think. I don't know what their expectations are. I mean, I read the report. Single digit growth, I think. The CEO, shortable. Definitely shortable. But be careful, because you can't fight over exuberance too harshly. You need to use very fine, very methodical tools. I think people's expectations are out of whack here. Let's go statistically speaking. Okay, so let's go find out if it's a growth stock or not. It is not. It's shrinking. Okay? Shrinking. I don't care what he forecasts, the company's shrinking in sales. Right? Okay. So maybe that's their hope, that they're bringing back up to profitability. Meanwhile, you got to put a valuation on it. It is not a growth company, so you don't use the price to sales. But let's say you do. It's hella expensive. Let's use the PE. It's the most expensive until the last quarter of 2021. What happened in the last quarter of 2021? I wonder. Oh, yeah. The start of a 10-month correction. So not an obvious entry point. I say that with complete confidence. Anybody going Starbucks long here, hey, you do you. You might make money. It might go to 125 and 130. Just like Palantir, it'll have to do it without me. This here is most definitely a nope. An NOPE. Not an obvious point of entry. There you go. I don't need to. Why? It seems like a short. Isn't that what I just said? That's what I just said. Okay. So SG. No clue what that is. It's falling out of control. So they just gave you a sell, which is 25.26, and a buyer below 20. You're stuck between those two. There's no decision to make other than that. I'm not qualified to tell you if this is a good entry point in the long term or not. Technically, it is a pivot zone, so you might have support. But I don't know anything about the company beyond that. Expensive or not. I can tell you rallies into 30, I would exit. This looks pretty tough. Sherman Williams, all right. They bounced off of the support perfectly, and they're fighting over a resistance zone, which we've highlighted. Nothing has changed. I don't need to add a single thing, except tell you that if they take out 370, they may get to 384, and then it'll be shortable. Okay? This was a masterful job of getting to target 1 of 2. Target 1 is 372. Target 2 is 396. So close longs as you approach, and short maybe. Okay, So for the next few days, you need to hold 342. Otherwise, you test your support, and backup support is available if you lose it. Meanwhile, the bulls are trying to get to 380. SMH. Okay. So they failed in the letter R's. That was perfect. And what was not perfect is they did not hold this one. So they're trying to recover that one at 232, the squiggly mark. Because if they don't, they'll go to this rectangle. Everything here is still the same. So now what I'm going to tell you is that the new information is that this zone here, big test for the SMH. Okay, and I would short it. I would get out of longs starting 257, 247, 248. Okay, so there's a lot of work for the bulls. So what they need is a huge reaction from maybe follow ABGO and go, and they are selling rallies and making lower lows. So let's do that. Let's visualize it. Like from here, if you bought it, you made money up to here. And then what happened by the time you went here? Let's take the same price action and put it right there. Why not? This seems like a logical path. Okay. Southern Copper. Okay. So I do remember giving, I said they would dip and pop and then make a decision. Drop lower or take off. So the levels were correct. And they did that on the earnings. They did everything on the earnings. They dropped lower, almost to the target, almost from the circle, and then they rallied and gave up the top. So this forecast was absolutely freaking perfect. They did everything on this forecast. I remember saying something like, hey, you're telling me it can go up and can go down. I said, no, I'm giving you the levels that will matter, and they played out exactly the way it mattered, which means what? This here is not an obvious entry point. I would need to look. In fact, this is shortable now. From a technical perspective, this red W on my screen says this is target one. I'll break it up into two pieces just like the other one. Vulnerable. I'll put vulnerable on the first one, not put anything on the other one. Those two arrows are target one of this red W. Target two is 84 right there. So I would say that you do have support starting in there. That's about target two. And how long can I stay short? As long as very tricky. So technically the red thing breaks apart immediately above last week's high, but I can tell you, I would not want to stop out of a short if I started here below this level. So I would stay short as long as it's below 92. And even then, man, all of these failures. So I would take a short that can survive a rally. How big of a rally? 2 to 5%. So maybe start by selling a call spread, and then if it goes against me, I would add a debit put spread and then stop out if it doesn't work. But it's definitely not a long. I'll add it to my watch list in case I get bored. SOFI, much better deal than before as they fell into support. Now the support still needs to hold. If not, you can still go way below. So the worst case scenario on this one is that the markets get shaken off for some reason, shaken out, and this one takes a spill lower. It's not a bad starting point if you consider this environment, this here. But if the market's correct, this environment is way too high. This stock is way too high. It should be in the under 10. If you look back a year, it's probably been, under 10. When did it break out of 10? So let's call it October of 2024. It broke out of 10. Folks, that's nothing. And this here now becomes a, not quite, but maybe a complex head and shoulder-ish pattern, loosely interpreted, says that you might have $4 of downside from the yellow line. So 10 is doable. I don't mind starting longs here, but I want leave room to more than double my order. Stellantis, is that Alpha? Yeah, love those cars. I flew into the river in one of those cars. True story. One day I'll tell you that. Okay, so 15 was a level not to lose, and once you lose it, then it becomes now 12.20, a level not to lose. If you lose 12, you're probably going to 10.8. A lot of sellers above. So that's difficult stock. Symbolic, we bought the dip by selling a put spread or something. It's a stock I want to own, so I would start selling a put spread. And if it continues to fall, I would sell my protection as long as I don't change my mind and say, give me the shares and I'll break even in the 15 to 12 area. That's still my plan. If I get long with shares here, I don't mind it. I just need room to more than double my order. Okay, so if robotics are a thing of the future, and they should be, this one is probably a buyout target, but it's doing well on its own, so I don't mind investing in Symbiotic. A lot of support from here to 17. A lot of resistance above 27. If I traded it, I would book it above 28. AT&T, I would not. I mean, I don't know why you're asking me. If it's to short, man, it's like GE. You're shorting something that makes sense to short, but look how far back you need to look to see when it was the year before. I don't think that's an all-time high. Definitely not. So this here is a short zone that could be here or 30 or 31. So if you wanted to short AT&T, come to me during the live room. I don't know how liquid it is and how much premiums it is. It's one of those things that I would go out to December, sell a call and forget about it. But I just don't want to be in that muck. I cannot stand the company. I've done business with them on several levels, and they've disappointed me every time. The stock price usually does not have a lot of premium, so I'm not interested in selling. I may be surprised. Maybe the premiums have changed, so I will look at them. Target. It's a it's a political football. We're so stupid. We are so stupid collectively as a people now these days. We see stuff on Instagram and TikTok, and we believe it's true. You see a bunch of people say the story changed. But 6 months ago or 8 months ago, you would see the right coming out and propagating a story about, oh, look at what they have on their shelves and look at the people, they're not here, parking lots are empty. And now you're seeing the exact opposite. Oh, because of DEI this and DEI that, look at the parking lot empty. They're both lying. They're both lying, okay? So look at the P&L. These are legally bound to be perfect, this P&L. So stop trading the social media. I had too many people come to me, oh, it's losing sales. Is it? Where? It's about the same sales as before. So when you see a drop in sales, or when you hear the company tell you, oh, our next quarter, because we changed our DEI thing, we're going to lose 30% of our sales. It's just people paying people in order to make money off of their stock. They're trying to manipulate the perception of the stock. Forget it. I tell you, if it loses 120, it goes to 104 or lower. And I would trim rallies. Like if I got long, I would exit at 136. In 2 days, it reports earnings. And we'll see what numbers they give. I would be a buyer of dips in Target. I don't like to invest in retail. And I also want to see what they say about the consumer. Okay. They probably benefit from a recession because they are cool stuff at relatively low prices, not very low prices. So we'll see how that plays out. Okay, so a must-hold situation. A bounce is available. I would use the bounce to exit. Target. TMDX. Wow, pretty violent stock. What is this? Transmedics. Okay. That wick on the earnings should tell you where the sellers are. They love it up until 84, but they refuse to go higher than that. Conversely, they tell you that the buyers are there. So you do have a good base. It might drift lower, maybe even the 64, but then you have backup support. So there's nothing to do after the violence of the earnings report. That's the short-term story on that one. Okay. No easy tell here, except to say that if you didn't tell me about these wicks, I'd say it might drift towards 70 again. Take out 80, you can get to 90. You do have resistance to deal with. Toll Brothers, Okay, you might have a bounce, but the bounce is going to face a hideous seller. This might be now acting like I thought it would be acting in the last 2 years, when we know that. Anyway, long story. I've covered it too many times, and I was like, "What is so puzzling?" It is so puzzling. So I said, "I'm not shorting them, but those whoever are going long at the top are going to be stuck for a while." And now I think rallies are going to be rallies will be sold. So act accordingly. That's resistance, and I'll put a line where I think I would be definitely out. Let's zoom back out and see the over. Okay, so now we have a picture. I do like the levels much better. This is a well-consolidated level, but it is not a hard floor. There is a hard floor, but the volume profile is too choppy. So it's like a Swiss cheese. Rallies into 130 for me and 135 are exits. Because if you just say, okay, what happened from here to here? Okay, nothing happened. I clicked on the wrong thing. What happened from this dip and here? We're not yet on a dip, but they're selling rallies here, right there, dip. They're selling rallies. So it is conceivable for us to be in the 100 area. All right. Tesla. Wow. Okay. So a couple weeks ago, we said, what if they repeat this inverted scallop? Look at how they did. So they got me my level, even though they didn't bounce much, just for a few hours. But you see how this played out perfectly? Yeah. So let's zoom in and see how well it played out. Wow. It's like somebody gave us a... And they did it also inside the day. So I'm going to delete those because I couldn't see them. So now rallies into 312 and 325 are shortable. So I'll put 312, 325 are going to be difficult. And the yellow line. Looking left. $265 would cover a gap. So much chop back there. Look at this old resistance line. Oh my God. Okay. So now they're pricing out all the stupidity that I've been complaining about. So the easy short is out. If I just started long Tesla, not a problem. I should expect the rally attempt to 330. That's just the trading zone. Okay. Now, check this out though. What happened between here and here? Okay. So that's a pop that faded and they did a new low up here. Pop, faded, a new low, right? Repeated. What if they do that? What if they just do that? I basically said, what if they repeat this behavior? Look at how well they match up. That's crazy stuff, right? Okay, Jay. Are you serious with that comment? Come on. What the fudge, man? Okay. Get out of the gutter in that mindset. The gutter that is America right now with all of these mindset. Doge just this and Doge that. Let me stop the recording. So TSM, excellent PNL. Slight detour. Yeah, I did. Thank you. Look at that. Al, thank you so much looking out for me. That's amazing. What a team. All right. Hopefully I didn't take off anybody in the room. Passion. Okay, hold on. I'm marking these. I'm going to say some stuff about them. So this is one of the strongest companies on the planet. Proof is in the pudding. Look at the P&L. That's what I mean. Proof is in the pudding. And the fact that they cannot find support is surprising, but that's an opportunity. So look at the comments here on the left. That was from January. I said it could drift to here. And look at where it's at. It's literally at here, like not a penny away from here last week. You see that? And that was an old resistance zone. So you can throw a class about charting with this chart right there. Prior resistance becomes forward support, and they're trying to get into it. In fact, they bounced off of it here, and they're bouncing off of it here. Now, the problem with this time, though, is that they triggered a head and shoulders the size of Texas up here. So these white lines represent potential targets on the flip side. So if I take the mirror image of these down below, so let me rephrase and give you a quantifiable number. This drop can be targeting 176 through 170. So Friday's lows in TSM were the target zone of losing 188. Zone 1. Zone 2 can be 162, the bottom of the blue box, or lower. I'm not going to say the other number. So let's rephrase. 188 is a level that needed to hold, and losing it hit target 1. Target 2 is the bottom of the blue box. They can negate that by getting back above 191.92. So if they reclaim this, we're going to change that to yellow. If they reclaim and hold the yellow line, they can avoid finishing the blue box. I'm a buyer of dips. I could sell a put to own shares. I could sell a put spread to own shares. But here's the problem. If I decide to sell a put to own shares and the market actually corrects another 5%, this one will be below. So make sure to choose a path that leaves room for error. TSSI. Wow, look at the jump in sales. So clearly I don't know what this company is. But wait, that's not a wow. So last year, okay, maybe 60 million, and now what is it? No, 60 million. So what the heck happened here? That's weird. Anyway, this one broke trend. So onus is on the bulls to get back above 14. Otherwise, you might drift to 7. That's the big picture. You see how it's curling back down? So you want to know that this curl is not a trend change. Is it? That's the question mark. So now they're going to sell rallies into the base, and the base is around 8 to 7. TTD. We bought the dip, no? By selling a put or a put spread at 60. Yeah, I'm still in it. I would stay in it. Good P&L. I don't remember why they fell. I think they delivered a 25% growth in sales, something like that. Long here, question mark. Okay, yes, that's what we did. Long lower. So if I took a starter position, I have nothing to do here. I'm not expecting them to go back to 108. In fact, it's going to be probably years before they go there. But the point is, I'm trying to generate income from the stock at the risk of owning it at a lower price for a little bit, which shouldn't be at an end of the world. I would not add. And if I took it as a trade, I would close that trade on rallies. If I'm invested in it and I added, I don't add anymore. If I'm looking to add, I could. But as long as I have more to add later. TWLO, I wanted to short it. I think we crushed it on earnings. One of my old fave stocks, but caution, I may be changing my opinion. So I loved it because it was an unbelievable growth company and they were a cranker. Well, now they've had multiple quarters of single-digit growth, with the last one being barely double digits. I want to see another double digit and above 11% for me to keep it in that mindset. Otherwise, it may be too expensive. 4 times sales. Yeah, when it was growing double digits, it was 3 and 4 times sales, and that was okay. But when it's not, then be careful. So let's play the ranges. This, I think, is going to be a monster problem. Anything inside the yellow line, the yellow box. Clearly, anything inside the red box is a sell zone. So if they go into a zone above 132, I would start exiting because that's a monster fail up there. Maybe they're starting to break trend in that one. It's too early to tell because of this rally is too sharp. So I cannot tell you, but it's a possibility that it's going to 84 in the next 3 months. It's a possibility. It's as possible as taking out 140. 140 should not be easy. TXNM. Okay, I have a lot of lines and I don't remember anything. There you go. T1 did not develop. We can take that out. Alternative short. Oh, okay. I remember. I said you can short it here or short it there. So if you shorted it there, you're still in the game. I have no other information. Nothing has changed. The breakout happened from here. The target has been met. So you tell me, are they going to be able to take this out? What the hell is this? So be careful. What is this? What the heck is this? Wow, so volatile. Investor-owned holding company, electricity. Oh, my God. Okay. Be careful. It's exhausting. Those concepts, when people get their teeth into something like that, is exhausting. Non-tangible things, you know, sometimes you would have to like read through tea leaves in order to figure out what's going on. Uber, good that they are above 71. So approaching 71 should be a lot of support. The same statement is about resistance at 79 and 80. That's going to take a lot to break out. If you take out 82, you can get to 88. So as a trade, it's not bad. If you're buying dips on this drop from the recent highs, yes. Investment for the long term, also yes. So all in all, a long here is not crazy. And just leave room to add if it's an investment. If it's a trade, that's fine. UNH, so this is a crazy stock. I think that getting above 500 convincingly is going to be very difficult. And how about I say it this way? It's just as difficult, it's just as easy, which means it's not, but it's doable. Let me rephrase it. Getting to 515 is doable, but it's not going to be easy. Getting to 440 and 430 and 420, 430 is doable, but it's not going to be easy. You heard it? Getting to 520.25 is doable. It's not going to be easy. Getting to 530 is also doable, but it's not going to be easy. Meaning what? It's range bound, but the range is huge. The VIX, I'm not sure what you want me to say here. Okay. I'm holding my calls. I trimmed some. If I bought VIX for protection, they're doing their job. I wouldn't eliminate those protection unless I know that the risk is not there. So what do you know that I don't know? This here is not an obvious entry point from a trade perspective. But if I need insurance on my stocks and when I say the VIX is insurance, it's to cover the moment where it goes up to 40, which means something major is broken in the world or in the US. Something like, God forbid, a terror attack on US soil, or a change in the presidency, or a fundamental change in the story that we have now. NVIDIA saying, I'm not growing anymore. Or somebody saying, okay, we've got a war between US and China. Something that major. The markets will collapse. Literally, they would just collapse in a few weeks. And if you're holding VIX calls, the VIX will explode to 50, 60, 70, 80, and 90. And if you're long from the 20, okay, it's not too late to buy the 20. But you're not covering a 10% drop, okay? Vodafone. Good progress last week, above 870. This could carry to 9 or 910, where I would exit as a trade. If I'm looking to get long, buy the dip into 860. Vertiv. Okay, so we discussed this during the live, I think, this week. One thing I'm concerned about, I've said this term a few times today, change in trend. Okay, so I went backwards in time and I drew a trend based on my eye. These thin lines, it's called a pitchfork, and I went in time for the pitchfork. You can see I went back to 2023, the October 2023, and I went to the high and the low, and that is supposedly the trend. The yellow line is the reversion to the mean. You see how we were ping-ponging above and below it, and then surfed it and went above and below it and above and below it, and we couldn't trade back above it. And now we're below the below. So we're out of that channel. It's a steep channel, so it's not the end of the world. There's still a lot of support below. But they broke trend. So now this blue line is a problem. And since I don't remember why I put it there, I'm going to move it over to here to where I say, I think it's shortable into the blue line. So if I'm long and we approach this blue line, actually halfway through the blue line, I'm out. There is a chance that this thing gets down to 75 or 80. Vistra, volatile chart. We could get a bounce, and a bounce should be look at the letter R, and look how much they fought for it and they lost. And they got us target 1 almost to a penny on this green M. I challenged them to get to target 1 again. Okay, and definitely not target 2. Target 2 is up here at 191. So tell me, what's it going to take out this line? Okay, another pivotal line is somewhere in here. I don't even need to zoom in. So if they don't take out, I'm going to put a letter R inside of there. And then this R is still there. This whole thing. I think it's just as easy to come down to, it's a better long if we approach 110. And if we do get to 110, I think we end up at 90 or 85. So careful. If I'm long as an investment, I'm not adding. If I'm nibbling long for the investment, I'm taking half the position and nothing more. Warner Brothers, it's a sell zone up here. It's not for me. Buy the dip maybe. Technically, it looks good. It looks like it can go to 1240. If I don't short it here, I can short it up there. If you take out 1280, maybe you can get to 1380. But do you have the fundamentals? I don't know. Wolf. I don't trade wolf speed. Be careful. The losses are growing at a faster pace than the sales. In fact, sales are not growing. What's growing is the losses. So you need to find out how it's doing on cash. If it's not doing on cash, this company is in deep trouble. Let's see here. Cash from operations, negative. Okay, so they used to positive cash flow from operations, not cash flow. So we look at the P&L. If they're growing 12%, they're doing it by creating a net credit. So they're not bleeding cash. But they started bleeding in 2020. It got worse. It got worse. It got worse. And then now it got a lot worse. So if they run out of cash, they need to issue cash. They either borrow, get investors, which is diluting the stock, or issue convertible bonds. They are building 5 billion factory. Okay, so that's probably where the money went. Very volatile stock. I do not trade this. If you know it and you want to invest in it for the long term, that's probably the best way. Just buy some shares. And I don't even think you can sell covered calls because the options are very wonky. U.S. Steel, headline. I told you when the headlines were, oh, it's going to be bought out. I said what? What did I say? There is absolutely no way the U.S. will let the buyout go by Nippon. There is no way they're going to let a Japanese company, a non-U.S. company, buy a company called U.S. Steel. It's not going to happen. The government will not let it go, especially this president. So if you're buying it for that headline, not going to happen. And where is that headline? Find out where it popped whenever the headline broke out. That's the roof for that stock, unless they change their P&L. Tariff this, tariff that. That might directly impact the sales of this company. So the headlines of tariffs do matter for this company when it comes to steel prices. So you need to do homework on that part. Personally, if I'm trading a stock and it becomes a headline stock and I'm not invested in it, I ditch the trade because that's a question mark that I cannot control and it can happen any day. So, not for me. You can say that if it takes out 42.5, it probably gets to 46. And I would be buying dips into 35. And if that fails, I would be buying dips into 30. And if they lose 29, they're going to go to the low 20s, mid to low 20s. So it is tradable, it is investable, but it is wild with headline risk. So be careful with that. XLE. I would short every rally in the XLE. So this is two stocks. Exxon, Chevron are about half the stock, the XLE. 93 should be a sellable zone. 95 should be a sellable zone. If they, by some miracle, break out of those two, 97.50 is a sellable zone. Meanwhile, you have the opposite. You have support at 87, backup support through 83 and 82. So range bound, they're tightening the range, higher lows, lower highs, battles coming. Hold the drum roll for about a month. There's going to be a breakout or a breakdown. So maybe it's at 85, maybe it's at 95. XLF. I'm short, and I will add to my short this week. Maybe, maybe not. Depends on what I get. Remember the big conversation with Berkshire? This is it. This is Berkshire. Berkshire Hathaway. is the largest component of this company. But then you have monsters inside. Visa, MasterCard, monster stocks. And then you have JP Morgan, Goldman. Those are monster stocks because they are large dollar stocks. They matter way more than Apple do. Like Goldman Sachs is a beast inside this. So this is technically exciting. It can go to 53.40. Okay, so I'm short right now with puts. The puts were green this week. They are no longer green now, but I did sell puts against them. So I have a position that's under fire, is to say it. And I will decide to cut it loose because I'm short Berkshire and JP Morgan, and that's the same thing as being short the XLF. And it's a small position. I don't want to dig my heels if I'm fighting the other two as well. So I may choose to just take this one off or ride it out for a couple of days and close it at a loss at the end of the week to see how this fight is going to end. 3-4 failures in a row. This one was looking pretty good. So maybe they pop to 42.40 and then they drop back to 51. So that would be how I would trap the bulls. Go pop, everybody joins it, come back to here, stop everybody out. No harm, no foul. Because if you take that out, in theory, you should get to 54. Let me give you an exact number. Oh yeah, 54 would be in the line of sight. Okay, but based on what? Growth in the banks? Come on. Industrials, I'm a fan of industrials, Caterpillar being the first. GE is in there. Boeing is in there. So I think we shorted the industrials by selling a credit call spread and it played out. I remember buying it back for pennies when we sold it for a lot of money, for a lot more than pennies. They are shortable here. In other words, this XLI ETF is going into a zone that is difficult, the blue box from here. I don't know why that was there, but it looks like difficult zone. That is still resistance. You're right in the middle of it or approaching the middle. I would consider 137 as a target zone, okay? And I would also consider shorts. So if I wanted to trade the stock, to short it, I would short it anything above this red box right there with time on the clock. Okay, so if I can sell a call or a call spread up here for the next month, that's what I would do with this. Realize what's inside of this company. Caterpillar being Deere is in there. So look at those individual stocks before you decide to do anything drastic. I know there's a lot of support. So 130 should be bulletproof. Good support at 133. For the same reasons, 138 should be impenetrable. It should be like no way. This was an area of interest back then, and that's where we are right now. So I'm going to put also, I'm going to zoom in so I can see candles, so I can adjust this. I'm going to give it the old Nick conversation here, resistance zone. And while it is a fair value gap of sorts, I'm not going to say it is because I would need a conversation to explain it. All right, so let's see what it looks like on the chart. That is a resistance zone. So as it approaches 138, I would close my longs. XLP, I am short and winning. I forgot how. But anyway, I believe I'm holding puts. And I don't know if I already am short calls or not, but I will add the short calls. So this is the staples, Pepsi, Coke, and some and those companies. It just doesn't make sense that they are breaking into an all-time high or trying to break out when the tech companies can't. So if you tell me the market is going to rally 5 to 10%, yeah, okay, I get it. They will be at 85.50. So I'm okay selling a call above 85.50 for me. I can't remember my trades, but I will go back and I will reissue a trade alert if need be, or an update to my trade. Okay, the XLV, almost the same statement as the XLF, except these guys are a bunch of exciting stocks. So if they break out, they can go to 153 or 5 or 6. What I'm more concerned about is all these lines from the bearish perspective. The bears are losing an opportunity. They brought the prices well below all these lines, and now the bulls are trying to get back above the letter R, which encompasses all these lines. That would be a hideous loss to the bears. They worked so hard to take the advantage, selling rallies, and they just like that dropped it. I still stand by my resistance lines. It's not easy to get up to 154, but that's what they're trying for. Exxon, we already covered Chevron. They don't trade the same anymore. That's weird. So this one is stuck between 114 and I would say 107. Until then, that's the zone. So I'm not gonna buy calls. If you buy shares, okay, I can understand it, but it's still not for me. So what am I doing here? Nothing. I could sell puts to own shares, sell a put spread, own shares. Buy calls, hell no. That's the only thing I would not do here. Okay, so range bound, own it, okay. Retail, XRT. At one point, I wanted to short that, but we haven't traded in a while. This is a target that's been met. So Macy's reports, I don't know if it's still a significant part of the XRT. Costco reports, so that probably influences 3, 5, and 6. Target 1 has been met. Target 2 is more like 72. And target 3 is that one. So basically what it's saying is, very interesting scenario here. 74 is really important. If they can get back, I mean, they have a chance to get back to 76 and 77. That would be where I would get out. That's the neckline that they lost. Whoops. So that's the neckline that they lost. And in fact, as long as they're below here, it's in the hands of the bears. And here. So I would put a letter R and call it R+. That's strong resistance. So rallies are going to be sold. Maybe they'll hold the floor. If not, they have backup support. So I don't expect more downside from here unless the market corrects. XYZ, that's the old square. Now they call them block. That's pretty weird. First you change the name of the company and now you change your ticker. So now it's unrecognizable. The guy is kooky. Smart, but weird. All right, so I don't know what you're asking here. It's in a support zone that extends through 52, 54. So maybe I sell puts to own share. Maybe I covered this already. Why does this sound familiar? Didn't I say sell a put or a put spread? Yeah, I'll be comfortable if that's what someone's looking to do. We have support below and backup support below that. So but it's really old. So I'm gonna say old. What? What does that mean? It might not be very accurate. So it's like a zone, not a hard line, even though it looks like a hard line. Like 53.7 looks like boom and gone. It's been a while. So maybe they, what happened to, there we go, wow. Maybe they're like a mattress. It's not very sharp. Zebra, so it fell apart on earnings. You have support at 300, backup support at 285, backup support at 270. I believe I looked at the sales and they delivered sales growth, so I don't know why it's falling. What I can tell you is that rallies back into 345 plus or minus 5 are going to be very difficult. So maybe this one has made a top for a long time. Let's look at the trend. Maybe we can... Okay. So it's not game over. All right, I like it. So watch this. This is a weekly chart, so it's pretty long term. What? Are you kidding me? No way. Fake. That guy's funny. Okay, so check it out. So this failure right there, I would like you to go look left and see my line. I don't remember when I put that, but that was 2022. Okay? I'm just saying. That's good news because that's what should have happened. Now let's add a couple more lines to it so we can forecast what one can do. We are falling into a breakout zone, which is normal. I'm also going to mark a weekly high here, freakish weekly high. Freak week high. When was that? July 2024. So rallies into 375 are going to be met with weirdness, right? That right there. That is an emphatic say, no, we don't want any of it to do that. Now, you may have bottomed and you created this huge support zone below. So I would comfortably own the stock as long as I'm okay with the outcome down in that zone. Look how long it's taking for my text to show up. I did type and I hit enter. I don't know what happened. But anyway, so the panic mode is not here. If I'm long and I didn't get out, I don't get out here. If I'm nibbling long, I'm okay as long as I only do part 1 of 2. Are you serious with this not showing me the text? There we go. Wow. Okay. Trading view, what's going on there? Taking out 428 will probably get you 540. What kind of a market will it take to do that? So I'm going to put it on my to-do list just so I can revisit it. Interesting chart. And with that, folks, we end the day, and I'm going to stop the recording.